All right, everyone, gather round. Let's be honest for a second. Have you ever looked at those people who are seemingly at the top of their game? The legendary investors, the trading gurus, the experts who just seem to effortlessly navigate the markets, and thought, wow, they must have been born with some kind of secret sauce. Maybe you felt that pang of inadequacy, that whisper of doubt that says, I could never do that. I don't have what it takes. They're just naturally gifted. It's easy to fall into that trap, isn't it? To see the finished product, the success, the accolades, and assume it was a straight, easy path. To believe that the reason they are there, and you are here, is because of some inherent, unchangeable difference in talent. This mindset, this belief that success is primarily due to innate ability, is perhaps one of the most limiting and damaging ideas you can carry, especially when you're trying to build something meaningful in the financial markets. It creates an invisible wall, a self-imposed barrier before you even really begin. Because here's the uncomfortable truth, the one nobody really talks about in those highlight reels of success. Everyone, absolutely everyone, who has ever achieved anything significant started somewhere. And that somewhere was messy. It was challenging. It was confusing. It was filled with stumbles, mistakes, and moments of wanting to just throw in the towel. The struggle isn't a sign that you're not cut out for it. The struggle is the necessary price of entry. It's the forge where resilience is built. It's the classroom where real lessons are learned. And if you can truly grasp this, not just intellectually, but deep down in your gut, you'll unlock a level of potential you didn't even know you had. So if you've ever felt discouraged, if you've ever compared your messy beginning to someone else's polished endpoint, stick with me. We're about to pull back the curtain and reveal the uncomfortable, yet incredibly empowering, truth about what it really takes to succeed, especially in the unforgiving arena of trading and investing. This isn't about some mythical talent. It's about something far more accessible and far more powerful. Let's dive in. Now take that feeling of admiring those at the top, that sense of inadequacy, and amplify it. Magnify it by 1,000. That's what the world of trading and investing often feels like, isn't it? There's something uniquely brutal and discouraging about trying to navigate these markets. Why does it feel so different, so much more punishing, than learning a new language or mastering a musical instrument? Well, for starters, the feedback loop is immediate and often financially painful. You make a mistake learning the guitar, you hit a sour note. It sounds bad, maybe a little cringeworthy, but you can just try again. Your bank account doesn't take a hit. You make a mistake in the market, and poof, hard-earned money vanishes. That is a profoundly different kind of consequence, and it cuts deep. It's a tangible, undeniable measurement of your current lack of mastery, and frankly, it stings. Furthermore, the market doesn't care about your effort. You can spend hours and hours studying charts, reading reports, analyzing companies, and still make a decision that results in a significant loss. In many other fields, effort often correlates directly with incremental improvement. You practice the piano for an hour, you get a little better. You study for an hour, you learn a little more. The market, however, can feel like a fickle, indifferent beast that occasionally rewards diligence, but just as often punishes it without explanation. This creates a feeling of helplessness, of being at the mercy of forces far beyond your control. You see the talking heads on TV, the market wizards with their pronouncements and predictions, and they seem to possess an almost mystical understanding. Their success feels unattainable, like they're playing a different game with different rules. The brutal reality is that failure is not an occasional setback in trading and investing. It is a constant, pervasive presence, especially in the beginning. You will be wrong. You will lose money. You will make incredibly foolish decisions that, in retrospect, will make you cringe. And because the stakes are financial, these failures feel amplified. They don't just bruise your ego. They impact your ability to pay bills, to save for the future, to live the life you want. This constant barrage of negative feedback, this frequent experience of being wrong and losing money, is incredibly discouraging. It tests your resolve in a way that few other pursuits do. It makes that perceived gap between you, the struggling beginner, and them, the seemingly effortless experts, feel like an unbridgeable chasm. It reinforces that toxic idea that they must possess some innate quality you lack, because surely, if they had gone through this, they would have given up by now, right? Wrong. And understanding why is the key to pushing through. Let's take a sledgehammer to that myth right now. The idea that successful traders and investors were simply born with an innate advantage, a preternatural ability to understand the markets, is pure fantasy. It is a convenient narrative that allows us to admire them from a distance without having to confront the uncomfortable reality of their journey. They weren't airlifted into success. They climbed, scraped, and struggled their way up, just like anyone else trying to master a complex skill. Think about it. How does anyone learn anything truly complex? They start with the basics. They read the foundational texts. They practice the fundamentals over and over again until they become second nature. Take something as seemingly obvious now as technical analysis. While it's a tool, not the be-all and end-all, it's a fundamental building block for many who navigate the markets. Do you think legendary traders just woke up one morning understanding candlestick patterns, support and resistance levels, and moving averages? Absolutely not. They had to learn it. They had to study. I remember early in my own journey, devouring books like Technical Analysis of Stock Trends by Robert D. Edwards and John Magee. This wasn't light reading. This was dense, detailed information that required focus and effort to absorb. It wasn't about inherent talent. It was about the sheer, unglamorous work of gaining a basic understanding. It was about learning the language of the markets, one painful concept at a time. It was about tracing charts by hand, trying to identify patterns, making predictions based on those patterns, and then seeing, painfully often, how the market promptly ignored my brilliant analysis. Think about the time investment. Remember when I talked about the Baker Library? That wasn't just a casual mention. It represented countless hours spent poring over financial reports, wading through dense prose, trying to make sense of balance sheets and income statements. It was the unsexy reality of financial education, the kind of work that builds a foundation brick by painstaking brick. Nobody is born understanding discounted cash flow analysis or the intricacies of options pricing. These are learned skills, acquired through study, through practice, and yes, through making mistakes. The experts you admire weren't born trading geniuses. They were born like every one of us, with curiosity, maybe, and a capacity for learning. But the genius part, that was built, forged in the fires of effort, study, and repeated attempts. They were amateurs once. They had to learn the alphabet before they could write the novel. They had to learn to walk before they could run a marathon. And that learning process, for them as for you, was anything but effortless. Okay, let's get raw and vulnerable for a moment. Because talking about learning in the abstract is one thing, experiencing the brutal reality of it in the markets is another entirely. And the reality, for me, and for so many others who have found their footing in this world, was paved with significant, painful losses. This isn't just theoretical. These were real-world, gut-wrenching experiences that tested my resolve to its absolute limits. I want to share these not for sympathy, but to illustrate a fundamental point. Failure isn't just a possibility in trading. It's an almost guaranteed, often repeated part of the journey. I lost everything. Not once but twice. The first time was around 1978 or 1979. I had managed to scrape together about $10,000. Now, in today's dollars, adjusted for inflation, that's a significant amount of money. But even back then, it represented a huge chunk of my savings, hard-earned cash that I had envisioned growing into something substantial. I put it into the market, full of confidence, armed with what I thought was enough knowledge. And I watched it evaporate. Every single dollar. Gone. It was a devastating blow. It wasn't just the financial loss. It was the blow to my ego, to my confidence, to my belief in my ability to understand and navigate this complex world. It felt like a complete and utter rejection, a definitive statement from the market that I just wasn't cut out for it. Did I learn from that? Apparently not enough, or perhaps the lessons hadn't fully solidified yet. Because not long after, I found myself with another $20,000. Again, a substantial amount of money, representing even more effort and sacrifice. And again, I ventured back into the market. And again, I lost it all. Every last cent. $20,000 down to $0. This second experience was almost harder than the first. It wasn't just a setback. It felt like a pattern, a confirmation of my own inadequacy. It screamed, "You had your chance, you failed, and now you've done it again. This isn't for you. Cut your losses and walk away." The shame was immense. The doubt was crippling. There were moments, many moments, where giving up felt like the only rational option. Why keep banging my head against this wall? Why keep putting myself through this financial and emotional pain? These weren't small, easily forgettable mistakes. These were seismic events in my financial life, moments burned into my memory. They were the kind of failures that make you question everything. They force you to look inward and confront your limitations. And they are, I firmly believe, absolutely essential for developing the resilience and the critical thinking required to succeed in the long run. These losses weren't just punitive, they were educational. They taught me about risk management, about the importance of discipline, about the dangers of emotional decision-making in a way that no book or lecture ever could. They were the harsh tuition fee for a masterclass in market reality. And if you are experiencing your own painful losses, know this: you are not alone. This is not a sign that you are destined to fail. This is a sign that you are in the middle of your education, a tough but ultimately necessary phase. It's crucial to understand that these struggles, these moments of profound doubt and financial hardship, aren't unique to just one person's journey. They are universal experiences, threads that run through the narratives of countless individuals who have achieved significant success, not just in trading and investing, but in any field that demands perseverance and resilience. When you see someone standing confidently at the pinnacle of their profession, it's easy to forget the years they spent slogging through the trenches, facing obstacles that would make most people quit. They too grappled with crippling self-doubt. They too faced criticism, often from people they respected and whose opinions mattered deeply. And they too experienced periods of significant financial hardship, moments where the dream felt impossibly far away and the wolf was very much at the door. Think about the doubt. Even the most self-assured individuals have moments where they question their own capabilities, where the weight of repeated failures feels overwhelming. There are days when the market seems determined to prove you wrong, when every decision you make blows up in your face. In those moments, it's incredibly difficult to maintain conviction, to trust your process, to believe that you are on the right track. This internal battle against self-doubt is relentless, and it never fully goes away, even for the most seasoned professionals. It's a constant companion, a voice that whispers insidious thoughts when things aren't going your way. And then there's the external criticism. People who care about you, often with the best of intentions, can inadvertently pour cold water on your ambitions. I remember facing skepticism, even outright discouragement, from people who felt they knew better. My father, for example, was a firm believer in the tangible, the concrete. His advice, born out of love and concern, was always centered around things like real estate, something you can see, touch, and understand in a straightforward way. The abstract, volatile world of the stock market felt inherently risky and unreliable to him. His advice, while well-meaning, was a form of criticism, a doubt cast upon my chosen path. It's hard enough to silence your own inner critic. It's even harder when the doubt is coming from people whose opinions you value. Financial hardship is also a common denominator in these early stages. Building something substantial often requires sacrifice. It means living lean, making difficult choices, and sometimes having to borrow money just to keep the lights on or to fund your continued education. And market access. Borrowing $4,000 might not sound like a lot to some, but when you're starting out, when you've already faced significant losses, it feels like an enormous risk, a gamble on your own potential. It's a moment of vulnerability, a tangible representation of the financial precariousness that is often part of the entrepreneurial or professional journey. Even individuals who go on to achieve stratospheric success often have stories of ramen noodle diets and maxed out credit cards in their early years. Look at the stories of famous entrepreneurs or artists or scientists. Rejection is often a recurring theme. That Harvard rejection story, for instance, is a powerful reminder that even the most talented and driven individuals face setbacks, rejections, and moments where doors are slammed in their faces. These are not signs of fundamental flaws. They are simply part of the process, the inevitable hurdles on the path. The world of trading and investing is a unique crucible for the human psyche. It's a place where your emotions are constantly tested, where you can swing wildly between feeling like a genius and feeling like an absolute fool, sometimes within the span of a single trading day. One moment you've made a brilliant trade, the market is moving exactly as you predicted, and you feel invincible. You're a strategic mastermind, a financial savant, someone with an almost supernatural ability to foresee the future. The dopamine hits, The confidence soars, and you feel like you've finally cracked the code. You start envisioning the accolades, the financial freedom, the validation of all your hard work and sacrifice. And then, just as quickly, sometimes without warning, the market turns. A position you were so confident in goes south. A pattern you thought was a sure thing evaporates. You make a rash decision based on emotion or panic, and you watch your gains, or worse, your capital, disappear. In those moments, the pendulum swings violently in the opposite direction. The genius feeling vanishes, replaced by a crushing wave of self-doubt and regret. You feel foolish, incompetent, and incredibly naive. How could you have been so wrong? How could you have missed the warning signs? You question your intelligence, your judgment, your very capacity to understand this complex system. The voice of the inner critic becomes a deafening roar, telling you that you were a fool to ever think you could do this, that you're not smart enough, not disciplined enough, not enough. This emotional roller coaster is not an anomaly. It is the standard operating procedure in the markets. The inherent unpredictability, the constant barrage of new information and shifting dynamics, means that even the most experienced traders and investors are never immune to these swings. They too have days where they feel brilliant and days where they feel utterly lost. They too grapple with the emotional fallout of losses and the temptation of overconfidence after wins. The difference isn't that they don't experience these emotions. It's that they have learned to manage them, to recognize them, and to prevent them from dictating their decisions. Emotional resilience is not a buzzword in trading. It is a fundamental requirement. The ability to absorb losses without completely derailing your strategy, to maintain discipline when fear or greed try to take over, to learn from mistakes without letting them crush your spirit. These are the skills forged in the fires of that emotional roller coaster. Those who make it aren't the ones who never feel like a fool. They're the ones who learn to navigate the feeling, to understand its source, and to use it as a catalyst for improvement rather than an excuse. To give up. They understand that the market will humble you repeatedly, and that's okay. It's part of the process. It's the price of admission to a world of incredible potential, but only if you can withstand the emotional turbulence it inevitably brings. So if everyone faces these struggles, if everyone experiences doubt, criticism, and financial hardship, if everyone rides that emotional roller coaster between feeling like a genius and feeling like a fool, what then is the defining factor? What separates those who ultimately succeed from those who eventually give up? It's not innate talent. We've established that. It's not luck, at least not in the long run. While luck can play a role in individual trades, sustained success in the markets is built on something far more solid. The defining factor, the single most important differentiator, is the ability to embrace failure as fuel. This isn't just a catchy phrase. It's a fundamental shift in mindset and a non-negotiable requirement for long-term success in any challenging endeavor, but especially in trading and investing. It's the ability to look at a loss, a mistake, a setback, not as a definitive judgment of your worth or potential, but as a valuable piece of data. It's the capacity to extract the lesson from the pain, to understand why something went wrong, and to use that understanding to refine your approach, to strengthen your strategy, and to improve your execution. Failure is not an ending. It is an opportunity to learn, adapt, and grow. Think about it. Every single mistake you make in the market, every single losing trade, is a data point. It tells you something about your analysis, your risk management, your emotional state, or the market itself. If you simply view it as a failure and let it discourage you, you've wasted a valuable learning opportunity. But if you approach it with curiosity, if you analyze what happened, if you ask yourself the hard questions, what was my thesis? Was my analysis flawed? Did I manage my risk appropriately? Was I driven by emotion? Then that failure becomes a stepping stone. It informs your next decision. It helps you avoid repeating the same mistake. This iterative process of trying, failing, learning, and adapting is the engine of progress. It's how expertise is built. It's how resilience is forged. Those who succeed don't succeed because they never fail. They succeed because they fail better. They don't let failure paralyze them. They let it inform them. They don't see setbacks as proof of inadequacy. They see them as necessary components of growth. They understand that the path to mastery is not a straight line. It's a winding road filled with detours and bumps. And every time they stumble, they don't just get back up. They get back up smarter and stronger because they've learned something from the fall. Embracing failure as fuel is about transforming disappointment into determination, setback into strategy, and loss into learning. It is the ultimate competitive advantage in a world where challenges are inevitable. Let's be absolutely clear about something. The difficulty you are experiencing is not a bug, it is a feature. The struggle is not a sign that you are inadequate. It is a prerequisite for achieving anything significant in the world of trading and investing. If it were easy, everyone would be doing it and making a fortune. The very fact that it is challenging is what creates the opportunity. It filters out those who are not willing to put in the work, to face the setbacks, to endure the learning curve. Your difficulty is simply proof that you are engaging with a complex, demanding, and potentially incredibly rewarding pursuit. And here's the good news: you are not venturing into uncharted territory. Others have walked this path before you. They have faced the same challenges, the same doubts, the same painful losses. And they have found a way through. This means there is a blueprint. There are principles, strategies, and mindsets that have been proven to work. It doesn't mean it will be easy, but it means you don't have to invent the wheel. You can learn from the experiences of those who have come before you. You can study their methods, understand their approaches, and adapt them to your own journey. The existence of successful traders and investors is not a reason to feel inadequate. It is proof that success is possible and that there is a path, however challenging, that can lead you there. You will inevitably face external negativity. People will doubt you. They will question your choices. They will point to your failures and tell you to be realistic. This is part of the landscape. Their skepticism often stems from their own fears and limitations. It's important to acknowledge it, but not to let it define you. Your belief in yourself, in your ability to learn and grow, must be stronger than the doubt of others. You must cultivate an unwavering self-belief, not in some innate genius, but in your capacity for effort, for learning, for resilience. The inevitable struggle is not a barrier to success. It is the path to it. It is in facing and overcoming these challenges that you build the skills, the discipline, and the emotional fortitude required to thrive in the markets. Think of it as a filtering mechanism. The difficulty weeds out those who are not truly committed. If you can embrace the struggle, if you can learn from your failures, if you can keep going when others would quit, you are already demonstrating the qualities that are essential for long-term success. The path is difficult, yes, but it is also well-trodden. And with the right mindset and persistent effort, you can navigate it. All right, so we've talked about the illusion of innate talent, the amplified struggle in the markets, the reality that everyone starts as an amateur, the inevitability of repeated failure, the universal nature of doubt and financial hardship, the emotional roller coaster, and the critical importance of embracing failure as fuel. We've laid bare the uncomfortable truth. This journey is hard. It will test you in ways you didn't anticipate. You will stumble. You will fall. You will question everything. But here's the empowering truth: none of that is a sign that you should quit. It's a sign that you are in the process. You are building something real. You are acquiring skills that are valuable and rare. You are forging resilience that will serve you not just in the markets, but in every aspect of your life. The fact that you are facing these challenges means you are pushing your boundaries. You are stepping outside your comfort zone, and you are on the path to growth. So what do you do now? You brush yourself off. You take an honest look at your failures, not with judgment, but with curiosity. You identify the lessons they hold. You refine your approach. You commit to the continued learning, the disciplined practice, the emotional management. You ignore the noise of external doubt and focus on the quiet determination within you. You understand that the struggle is not a punishment, but a necessary part of the process. You accept that setbacks are not endpoints, but opportunities for redirection and refinement. You possess the capacity to learn, to adapt, and to persevere. These are the true superpowers in the world of trading and investing. Not some mythical innate talent. It's the willingness to show up, day after day, week after week, year after year, and do the work to learn from the inevitable mistakes and to keep moving forward, one step at a time. You've got this. The path is challenging, but it is navigable. Embrace the struggle, learn from the failures, and trust in your capacity to grow. Now let's get to work. If you found this message helpful, consider subscribing for more insights on the realities of building success in the markets.